Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Today, we have RemSense Managing Director Steve Brown and Chief Digital Officer Anthony Rowe, who will provide an update on the company's strategy and operations. Following the presentation, both Steve and Anthony will be available to address any questions submitted. You can submit questions via the chat platform in the questions pane in the GoToWebinar control panel, and you can also email them to me at alex@investorstream.com.au. A couple of you already made that decision to send them through via email, and really appreciate you seeing those through ahead of time. You can also download a copy of the presentation via the handouts pane in the GoToWebinar control panel. It's also available for download from the ASX platform. A replay of the webinar will also be available on RemSense's website and social media platforms later today. But for now, I'd like to throw it over to Steve, who's going to kick things off for us. Steve, the floor is yours.
Yes, good morning all. So we'll just go through a bit of a brief presentation. Our intention is not to read verbatim every slide, but to take a few salient points from each slide and let you guys read the presentation in the background or at your leisure later on. We just wanted to make sure that there was plenty of time for people to ask us questions. So let's kick it off. Look, first the disclaimer, please read this at your leisure. And we're moving on to our first real slide, which is why invest in us? So look, basically we are building Virtual Plant. It's a unique real-world digital twin environment. We're totally focused on asset-intensive industrial applications. We've built a team around that, and we have a plan in place to aggressively attack the market in this area. So, you know, just in summary, again, you can read the rest at your leisure. We are actually building a credible and sustainable business by targeting strategic partners and engaging tier 1 clients. Virtual Plant is a proven technology and it's currently operational with 2 major multinational clients. We are generating traction and Anthony will address this later in the presentation. We are generating revenue, which again, Anthony will talk about later in the presentation in a lot more detail. And importantly, to back up the generation of revenue, we have some significant partnership and license agreements in place, which are worthy of a bit more discussion later on. So just a brief summary, RemSense today, you know, we have about 30 employees based in Perth. We have a global reach now through our partner relationships that we have in place, and in fact that we're continuing to put in place. We only listed in November last year, and our clients across our business cover a broad range from oil and gas, minerals, resources, defence and utilities. Thanks, Alex. We have 3 business units within the business. Data capture and insights, which captures data and provides analytics from both aerial and terrestrial scanning. We have our engineering and innovation team that develops new projects and new products, and Virtual Plant in fact came out of that team. And we have what we're focusing on now as the main creation of value in our business is the Virtual Plant product. However, all of those 3 are inescapably linked together. We need to capture data to generate Virtual Plant, and we need our engineering and innovation team to solve issues that Virtual Plant actually is able to generate for our clients. So next one, please. So just a brief overview of Virtual Plant. You know, really, equipment out there is changing and becoming more complex. It doesn't matter what industry you look at. Industry is seeking to generate value from digital transformation. They're looking to reduce operational costs, they're looking to increase uptime, and there's a significant driver to try to expand and extend the asset life of everything out there. Oil rigs, power plants, they're all being expected to last longer than they were originally designed for. So it's not just the new assets that are being built that require digital twins. There is a huge application for brownfield and existing assets driven by those drivers that clients are looking to put in place. For us and for our clients, visualization and consumption of data insights is critical. So how you actually present the information is so important, and virtual plant is absolutely a key enabler to that. So for those that haven't seen virtual plant before, essentially it's a human-centric navigation tool which reflects a real-world environment rather than an artificial environment that's typically created in a digital twin. So on the right-hand side of the screen there, the upper image is a typical digital twin screenshot. The bottom image is what comes out of virtual plant. So as you can see, what's actually in CAD drawings and design drawings doesn't necessarily reflect what was actually built or has actually been modified through the course of its life. So virtual plant is a solution that for each asset we can have live and operational within 6 weeks, and it doesn't matter whether it's a brownfield or a greenfield asset. And it's really a catalyst within a business of defining a new way of working. Thanks, mate. So one of the differentiated features of virtual plant is that it's actually driven by a photographic environment. Everyone's brain works in a photographic environment. It interprets images far quicker than it does interpreting text or interpreting other competing products like LiDAR, colorized point clouds. It's actually real and shows the true condition of the assets and working environment. And we're able to view a high level of data. So the image on that screen is a zoomed in part of virtual plant, and as you can see on there, you can read the ID of a particular fitting, what it is, what it does, where the pipe was made, and you can even read the stamping on the flange. So it gives a lot of data. Now, what we realised when we were able to see that level of data is it gave us the opportunity to do some really clever things. So what we do when we go and scan an asset, we're able to put that asset into our AI system and automatically go through and read every single string of text. And that means every single name, every single asset ID number, every single sign. So we're going through reading that. We're then able to automatically compare that to the client's asset list, because their asset lists are typically created based on an identifier, which is an asset ID number. And then we're able to link the two together, confirm that it's an asset, and put that asset tag geospatially within the virtual plant environment automatically. So to give you an example, we did that with a platform offshore. We scanned 540,000 text strings, and we actually identified 600 assets that weren't on the asset register of the client and weren't, in fact, in any of the maintenance schedules. And this isn't being critical of them. This is just a fact of life when you have an old asset that's gone through lots of changes over the years. The documentation tends not to keep up. So now that we are able to tag an asset geospatially, access a database, we can now interface with existing client solutions across the whole range of the client's business, including pulling together disparate and siloed data from existing legacy systems. Thanks, mate. So there are substantial value metrics when using virtual plant. A typical digital twin environment is generally used mainly by the engineering team within a company, which is a very narrow vertical within the organisation. Virtual plant is horizontal in that it actually has applications across the entire business. And one of the key things with Virtual Plant is that it's available for anyone within the company at any level, on any device, at any time. So you don't need any special training, it's available. This has proven highly successful, and we currently, for example, with one of our clients, Woodside, they're using it with 400 daily sessions, not only using their own staff, but it's also being used by major contractors. So it's a very well used product that's actually proven in the environment. So what I'll do now is hand over to Anthony, who will go through what we've done since we've actually listed in November last year.
Thank you, Steve. This is Anthony Rowe. I'm the Chief Digital Officer of RemSense. I just wanted to kind of give you a little bit of additional colour and unpack two things: our go-to-market strategy and also our product strategy. But firstly, I just want to kind of emphasise the market we're going after. So we're in essence going after the digital twin market globally. That market was 6.75 billion in 2021. It's expected to grow to 8.8 billion this year globally, and by 2029 it grows to 96.6 billion is the forecasts. So it's an interesting market that is effectively been developing over the last 3 to 4 years and has currently gained momentum. And the aspirations of every asset-intensive industry is to have a digital twin of some format within their business. So just to unpack the strategy from a go-to-market perspective, we've set up a direct sales team here in Australia to go after specific markets of oil and gas and mineral resources, transport and utilities. And the purpose of that team is to, first of all, get the hero stories, if you like, of the clients who are using the product, so that we can then use that foundation to help our partners and leverage them both locally in areas we don't have a direct sales force, but both globally. And I'll talk about an example of that with IBM later in the presentation. To be able to support those sales teams with outstanding product, we've had the opportunity to create a product that is enterprise grade and scalable, both secure and effectively born in the cloud, which enables us to ramp up extremely quickly new clients to bring online and support them in the ecosystems that they've already got as a strategic element, which AWS is something I'll mention in a second. What that gives us is the right go-to-market strategy, the right product to address specific sectors, but teed up to go after the opportunities globally. So just next slide, please. So what have we done in these early days? So we've built from the ground, repositioned the product in an enterprise-grade platform to be able to provide a digital twin in a software as a service environment and spin it up extremely quickly. The reason why this is getting traction is that the clients historically with digital twins have been used to it being long, laborious, and actually quite difficult to operationalize, and also really aligned to greenfield assets, not all of the enterprise. So the response from the market to date has been that the speed of delivery, the speed of capture is something that has really attracted interest. The AWS agreement we announced earlier in the year is significant because it gives us the same ecosystem environment as the client is in to be able to provide at scale, secure services of software that give them an added advantage in asset management and operations. So we've completed that, and another great milestone, and it emphasizes we've built a product team very rapidly since the end of last year, as we delivered version 1.5 in this architecture in April, and that we then secured the first SaaS client on that platform, which is a major milestone. And we are well on the way and have started development on version 2, which will be released in the middle of the year. We've strengthened our relationships across the patch with both clients and collaborated with technology providers, including, for example, a Chevron Kongsberg, who have a similar digital twin platform, but not in photogrammic essence. So there is actually a real value of collaboration between some of the existing digital twin products in the marketplace and what we have to offer. And to expand this further, we've signed up with QTech to explore the Queensland market in the coal seam gas area, and we're jointly presenting at APIA next week at one of the major trade shows to take that to market. So those are some of the headlines from the first quarter of engagement with RemSense. So there's a couple of things we'd like to call out which will give you, in essence, the scale of the market. So I mentioned earlier that every asset-intensive industry has an aspiration to have a digital twin. Some of the key fundamental systems of record underneath that request is the asset management systems that asset-intensive industries use. The two most notable are IBM and SAP. You know, they cover 40% of the market share globally. But the essence of why would you use a virtual twin on top of an asset management system is the same. It's a different way and human-centric way for the users of operations and maintenance team to consume complex data and make more informed decisions to reduce cost and optimize the plant. So we've signed the agreements with both IBM and SAP, and we're now at the advanced stages of putting those agreements, you know, to work with our pipeline. So I thought I'd call out one agreement, but you'll see at the very end, we've been working hard with a lot of tier one technology providers, and the rationale behind this is just to give us greater coverage and also validate and endorse the enterprise grade quality of the virtual plant. And so the significance of that is that IBM don't just hand out embedded software agreements to any partner. They go through a very rigorous evaluation process to understand whether the components in the solution that is going to be white labeled under RemSense, which has IBM components, it has to go through rigorous scrutiny for its solution's viability, the security of it, the market, why would IBM be interested in that? And quite quickly, IBM realized that they have struggled a bit with the digital twin strategy of themselves of going to market on top of some of their products. And they see this as a very quick win where we can work alongside to leverage that opportunity mutually. So we've embedded some IBM components, and the intention is to go after that asset management market globally. This is interesting because when you sign these ASA agreements, the sales forces geographically around the world of IBM are incentivized to support us, to find opportunities, to help us run opportunities to the ground, and provide the support that you'd expect of IBM's channel, which their go-to-market strategy is the channel for software. But it also gives us the opportunity to work with services arms who actually deliver some of IBM's products, but also other products across the patch. So IBM Consulting actually deliver one of the biggest deliverers of SAP. They're one of the biggest deliverers of Maximo. They're one of the biggest deliverers of cloud compute modernization, like in the globe. So it's a great place to be aligned with them to help support the rapid advantage taking of the current digital twin market. Just a few metrics out there, but the reason why I put this up is I mentioned that every one of these markets has an aspiration to have a digital twin, and then you can actually get your head around the opportunity size globally and the repeatability of it, and also the essence of that. Currently, the digital twin take-up operationally has actually been subdued because of the time to market of some of the existing products. So we hope to leverage right across this market sphere the rapid deployment of the products and the software under both IBM's and our other partners' wings. And just to emphasize IBM, why, when they looked at virtual plant, what got them interested. They have this strategy as they've moved to the cloud of their strategy to provide containerized Red Hat OpenShift versions of Maximo as one example. It's also interesting that they have also landed that in the AWS marketplace as well. which is where we reside. So it means that all of these components are interoperable, natively, and it also means that each component in that chain, in that journey, needs a virtualized, visualized capability. So it almost brings to life the rich data that IBM and ourselves are creating for the client. I just want to re-emphasize who these are the initial partners we've aligned up with, and some of them will be very familiar names. A few to call out is QTED, who is one of our first kind of prime distribution partners for the Queensland market for coal seam gas. We will ratify all of the mechanics of making that successful and then take that model from a partner distributor perspective and drop it where we don't have direct coverage. With the IBM, AWS, Matterport and SAP ecosystems, we'll drive hard and work closely with them to leverage opportunities together. So there are partners you can see where we sell with. That means that we identify an opportunity together and go after it together. Some we sell through, so there's the ability for our products to be in their marketplace. And then there are technology partners who we are influencing their development paths for the industrial visualization of digital twin, and they're also influencing our development paths. And then we've got the current direct sales of RemSense. So hopefully I've unpacked the strategy around the product to be enterprise grade and scalable, and we've set our stall out for business development around strategic target account selling and leveraging through a global partner network. So thanks, Steve.
Okay, so we're on to the Q&A sessions.
Thanks, guys. Excuse me. We have had a couple of questions come through. I'll address the first one to Anthony if I can. Anthony, can you just talk us through the mechanics of when IBM secures a contract with a client who is in a different geographic location than RemSense for virtualplant, i.e., who does the on-site photogrammetry work and how is the data processed onto the virtualplant or Maximo?
So yeah, thanks for that question. So like what motivates IBM sellers is the fact that they would retire commission quotas if our product goes through that ESA agreement. The interesting bit is that whilst we're based here in Australia, it means wherever geographically the client sits, the sales teams in that area actually get incentivized to sell with us. So that's like from the sales perspective of getting the client. When it comes to the contract and scanning, so we have set up a methodology and operating model for all the intricacies of scanning and the equipment, and we're working with a global partner network so that organizations can scan on our behalf. We do have direct scanning teams that can do a coverage for Asia Pac, but we think we will want to cover very quickly the US market and the European market. So we've set the standards, we've set the criteria for that high quality fidelity perspective, and therefore partners will help unblock that bottleneck of getting the actual scans. We also think clients may be capable of doing the scan as we develop that further when we're doing delta and time examples. So once we've got the scanning completed, the upload of the imagery and the data collection is obviously centrally through into the AWS stack, so that can be happening anywhere in the world. We then configure it and use our smarts to set up the instance here in Australia with our technical teams. But now that we've built it in this configuration with this delta of methodology to collect data, we can, as Steve said earlier, we can collect the data in 3 or 4 weeks. We can process it in a couple of weeks, and then we spin up a new instance in 4 hours in the AWS stack. Historically, it was a lot longer than that to put a new client on board. So in essence, that means that we've got global reach, scalability from a upload of the product perspective, and everybody in that ecosystem is rewarded.
Thanks, Anthony. Just on that, can you just explain further what Maximo is? And we've also had a question just wanting to know a bit more about your background from an experience level.
Well, it's interesting because I am kind of not quite the godfather of Maximo, but I originally from the oil and gas industry. Served my apprenticeship and then became a maintenance engineer with Norsk Hydro, and then spent a lot of time in industry. In fact, the first 15 years of industry, and that's when I first came across asset management systems and Maximo. From there, I started off with a few niche software startups, Engica being one of them, and we broke through from a business development perspective the whole of the power generation industry for Engica Q4, who were a competitor of IBM's Maximo at the time. So PSDI's Maximo at the time. So PSDI asked me to come across to work for Maximo, which has been it's a great product, and that experience of seeing how that product was built and become enduring, it's 30 years in existence and it's still the market leader in enterprise asset management. So effectively, what Maximo is the tool that helps clients manage the maintenance strategies, supply chain, etc., for their revenue generating assets. So you saw from the deck earlier, it's in pretty much every asset intensive industry. During my kind of 14 years with IBM, which actually came about because they acquired Maximo, which was the company PSDI and MRO Software who I worked for. And then on that 14-year journey with IBM, it's been a great education to understand, I was involved in a lot of acquisitions, I was involved in a lot of product kind of roadmaps and guidelines, but fundamentally my background was in business development. So I'm very familiar with Maximo. I'm very familiar with Steve actually, and RemSense prior to coming across. And I thought that the market gap of visualizing assets was very, very strong and timely, and therefore thought I could bring the two combinations of that experience and Steve's great product, virtualplant, together.
Thanks, Anthony. I'll just shift this one to Steve if I can. Obviously, the share price has undergone a fair bit of toil over the last couple of weeks. Steve, can you just give us your take on the share price and its performance of late?
Yeah, sure. Look, we're a very tightly held business at the moment. There's about 60% of our shares are escrowed, which means there's a small number of shares on issue. The strategic investors that we have on our register are focused on the medium to long term, and through interaction with these guys and girls, we're comfortable that the core holders understand the significance of the opportunity. But with such a small number of shares being traded, there's been some exaggerated moves both up and down. And of course, we've got the current broader stock market bearish phase and global impacts. But, as a business, we're not so focused on the share price. Our focus is totally on the core objective, which is building, strengthening the business, putting the foundations in place, and getting our product and our services to the market and make a real success. So the current share price, I think we can really do not know all about, but we're all committed to building it for the future.
So I guess, Steve, in a similar vein, what's your take then on the current market cap for RemSense?
Look, the market determines the market cap. I guess our job, to some extent, is to better inform the market of what the opportunity is and how we're going delivering our plan. If we just compare two similar businesses, Pointera, for instance, which is ASX 3DP, and Willow, which is a private company but recently raised a fair bit of cash, I think it's fair to say that we all believe our valuation is modest in comparison.
Thanks, Steve. Now, I'll direct this one to Anthony if I can. In your view, is the metaverse a real opportunity?
Well, it's interesting, the metaverse. The metaverse isn't new, right? Clients have had, let's describe it as data misery for quite a few years, i.e. masses of data but unable to consume it. And all of that information or metadata is just growing vastly, but the ability to augment it and use it is becoming easier, faster. So therefore, I think a lot of organizations currently have digital transformations in place. In fact, I can't think of one who hasn't. And their aspiration is to create their own industrial metaverse within their organization so they could exploit it. And we see the virtual plant as being, one of the most human-centric methods of consuming that metadata.
Okay, Anthony, so when are you expecting the next big contract?
Let me just check the phone for a second. No, it's interesting. I mean, I don't know how many of our shareholders are experienced in business development, but the first thing you need to do for any business, doesn't matter what the product is build a quality pipeline. Now, the only way you can build a quality pipeline is have a quality scalable product to describe to the clients with values that are going to, bring them some returns. So the first goal we had was to create a direct team who could build that pipeline. And we've done that remarkably in the first quarter, really effectively, of this year. And that's circa around 8 million of qualified pipe. And of that, there's about, I'm not sure if I'm allowed to use these metrics, so keep us right, Steve, if I'm wrong. We've got about $2.5 million worth of proposals out with clients currently. Now, from an enterprise strategic account selling perspective, with our current direct setup, we expect that pipeline to level off currently this year about 12 mil. And, we're expecting conversion rates to kind of grow and aggregate pretty quickly. The other significant thing that enables the sales teams to get additional leverage is the first successful selling of software as a service to a tier 1 client, because that validates the commercial model. It validates the scrutiny that the technology department, IT department of that tier 1 put the product through to make sure that it was secure and fit for purpose. So as I say, we've got a pipeline that's growing. We've got proposals out, and I'm not sure whether we have actually announced a couple of deals, but we're imminent on a couple. I mentioned the SaaS and the pipeline and the client at advanced stages, and obviously we've got proposals at 2.5 million.
Thanks, Anthony. So just to clarify, is the pipeline value an annualized fee pipeline?
The pipeline fee is roughly 50-50 of annuities and scanning. So the scanning part of the business is actually quite interesting because we see that as a recurring revenue. i.e. we scan the baseline of the product, but the clients are asking us to go back to rescan to do things like delta in time for corrosion, for example. The annuities of the actual SaaS is roughly half of that pipeline currently. And we hope to leverage the partner community to make an inflection of that.
Thanks, Anthony. Now, Steve, a lot of investors have noticed that all of a sudden all these options have suddenly appeared. Can you just run me through why that's happened?
Well, none of the options have suddenly appeared. I can make that statement categorically. So effectively, all of our options were disclosed in the IPO, and most of those options are held on escrow until November 23. They won't vest until that point. What we did recently was we released from escrow the seed round investor options. So we had seed round investors that put money into the business before we went to IPO. Their options have now been released from escrow and can be exercised should those investors wish to do that. All of this was disclosed in the IPO.
Thanks, Steve. Now, in your previous half year, you announced an increase in revenue of over 90%. From a cash flow perspective, how's the company tracking and how do you plan to maintain that upward trajectory?
Okay, so I think there's two questions there. One I'll address, and I'll hand the other one over to Anthony. Although I actually think he's answered that from his previous question about our pipeline. But as outlined in the presentation, we have sufficient cash flow for the short term as we build out virtual plant and commence quoting and contracting and delivering SaaS revenues. We've retweaked our strategy since IPO to reflect the greater opportunity that we now see. So at the moment, we have no action at all to have a problem with our cash flow. It's monitored on a regular basis. So there's not much of a, we don't see too much of a problem at the moment at all. We're quite comfortable where we are. And Anthony, I'll just hand over to you about how do we maintain our trajectory, but I think you've probably answered that.
Yeah, as I mentioned before, we know the headroom we've got in the Australian market with our direct sales force, which is a funnel roughly, so a weighted funnel of roughly 12 million. And out of that, we expect, the both scanning and data collection contracts to come out of that, and then the annuities of the SaaS, which are the more lucrative. Margins on the scanning is roughly 50%, and the SaaS follows the similar is the market of roughly 80% margin on software, which is not uncommon in the industry. So we know from those perspectives that the trajectory towards really significant positive cash flows are near rather than far. But like any other technology company, we're investing for growth. So there's going to be this curve where we invest for growth, and the inflection of that will probably materialize at the back end of this year.
I think I just might add to that with regards to the cash flow from the SaaS revenues, the majority of the SaaS deals that are done are going to be based on a multi-year transaction, which is basically invoiced at the start of each of the year of service. So the cash comes in up front before the actual work's being done through the year. So it's quite easy to see how you generate a few of these SaaS transactions, all of a sudden you've got a nice annuity cash flow coming into the business.
And also the feedback from the client, just to add weight to that, is the product is extremely sticky. So once the user's experiencing, there's a reluctance to ever not use it. And I found it really interesting, the feedback from the users and the clients saying, how simple it is, how quick it's been to use. And in my experience, when clients tell you that becomes a very sticky product, which means the drop off of annuities will be like rare.
Thanks, Anthony. Now, Steve, obviously you completed the IPO late last year. Will the company be looking to at any capital raises in the near future? And if so, what are the main priorities that you need to address from your perspective?
Look, as mentioned in our presentation, we have retweaked our strategy since IPO to take advantage of what we see as a greater opportunity that we now see. We've got a sound platform for growth, and we've been establishing the foundations through the first 5 months since listing, and that's all about maximising the global virtual plant opportunity. So we have a plan. We're executing that plan. It's around virtual plant as being the main driver for the future business, which is the priority. Look, we don't have any current plans with regards to a capital raising, but we would, of course, consider raising further capital if the right opportunities present themselves. But it's not something that's on the table at the moment.
Fantastic, Steve. And just finally, what are the key near-term catalysts for the company to focus on? You've touched on it, I think, in the presentation, but it might be worth just revisiting the key near-term catalysts for the company over the next 6 to 12 months.
Well, we've obviously landed some key tier 1 accounts in the oil and gas industry, and our aspiration is to get leverage even deeper within those organizations. So currently we cover probably about 20% of the potential in those clients. So a priority is to quickly expand out of our core accounts. The other priority is to make sure we leverage the partnerships effectively. So with the stories we've built from the industries we've landed initially, to make sure that we've got all of our partner community and channel community armed to be able to relay to the clients the value of our proposition. So in essence, keep building that pipeline, closing deals out, building with our core accounts, and riding the momentum of the digital twin demand in this market.
Fantastic. Well, that's all the time we have today. I'd like to thank both Steve and Anthony for presenting and taking the time to answer some questions. As I mentioned before, a recording of the webinar will be on RemSense's website and social media platforms later today. Steve, before I let you go, do you have any final comments to leave with us today?
I think the main message I'd like to give is to, assure everyone that we are genuinely serious about the plan. We are working the plan. We put the right people in place to exercise the plan. I think, getting companies like SAP and IBM to the position that they are in such an incredibly short time is a great achievement by Anthony and his team. We have a global opportunity and we're going after it.
Fantastic. Well, that wraps it up for us here. Thank you, everyone, and keep your eyes peeled for the replay and the presentation as well. But really appreciate you joining us today. All the best, and we'll see you soon. Thanks for joining us.
Cheers.